Hello and welcome to MasterChartsTrading.com market recap for Friday, July 31st, 2015. Today we'll look at S&P 500 as it tests its breakout, as it tests its support level, while QQQ is testing its breakout. And Apple is weighing on the QQQ together with semiconductors. We'll look at those two securities. Consumer discretionary XLY hit a new high, and within it XRT went an hour buy signal. Also, bonds TLT is getting ready for a major retest of its recent rebound, and together with the strength in bonds, the utility sector perked up. And the strength in the dollar sector continues, and we'll look at gold and oil as the commodities part of the presentation. All right, let's look at the stocks. S&P 500 large cap index. Okay, so I still think this is a bullish chart. The 50-day moving average is above the 200-day moving average, and we're kind of moving, we're chopping higher. I mean, I understand that in the past 3 months or so, we really haven't gone anywhere, and we just kind of traded in this range of from 2100 to about 2039. But I still keep a bullish bias on the S&P 500 and stocks in general. So last week we had a retest of the 200-day moving average and rebounded to close to all-time highs and came down pretty hard and retested 200-day moving average again. Now looks like we rebounded from it again, and we're kind of just stuck in the middle here. I still, once again, I think that the reason for all of this up and downs and really no strong move up strong move up or down is because market breadth is mixed. And like for example, you can see the S&P 500 advanced decline line has been trending downwards and together with on balance volume. So we need to see a breakout in the advanced decline line. And hopefully on good volume as well. The breadth picture did improve somewhat last week because, for example, right here on the 27th, the new highs, new lows percent indicator actually went below -5%, and this week we went right back up to +5%. So this means that there is now more than 7% of the S&P 500 stocks within this index are making 52-week highs. So that's a positive sign. So next is a performance chart, and this is for the past week, past 6 trading days. You can see that actually most of the sectors were up except for energy, but the most strongest gains were in the utility sector, and later on I'll talk about bonds, and I think bonds are helping utilities move up. But also the cyclicals, of course, are strong, the consumer discretionary sector. So together with industrials also perked up really pretty good rally this past week. So today I want to look at cyclicals, XLY. So next chart is showing consumer discretionary, or also known as cyclicals. Consumer discretionary hit an all-time high this week, and this is one of the most economically sensitive sectors out there. So this shows that the consumer demand is really strong, and excuse me, and this just shows that underlying economy of United States is pretty strong. And also the advanced decline line, you can see that it actually broke out above the previous high, so it did confirm this high here. So that's exactly what I wanted to see for other sectors, but consumer discretionary are there already. You can see unbalanced volume is trending down, but once again, I think it probably will be worked off if we see any more upside. And a similar picture with XLY, XLP high-low percent. So within the consumer discretionary, one sector I thought was kind of interesting was retail sector, retail ETF. So XRT is a very diversified ETF. It has quite a bit of stacks within it, having to do with retail, and they're all very relatively equally weighted. So this represents a really nice slice of the, it really represents the retail sector well. So, excuse me, last week we came down and tested the 200-day moving average and then rebounded off with the 200-day moving average. And it actually went on our buy signal as well here. So we'll see how that works out. But I think if market holds up in general, XRT is certainly going to benefit, and maybe we'll see a retest of all-time highs here as well. Next, let's look at Qqq Nasdaq Atl. So this one is stronger than the S&P 500 because S&P 500 have not yet broken out above its trading range, but Qqq clearly has broken out above the trading range, and this week, last week came down to retest this breakout, and I think this breakout for now is holding because you can see that the price came down to the breakout level here and then rebounded off of this breakout level. Now again, same thing as with S&P 500, I would like to see a breakout in the advanced decline line. This Qqq is really a very top-heavy ETF, and Apple accounts for, I believe, like 13% of this ETF. So, Google, Netflix, all of those stocks are certainly helping to push the index higher, but Apple really needs to start pushing higher as well. So let me look at Apple next. So daily chart of Apple going back 11 months actually. So here in December, or rather right here in February of this year, there was a breakout above the prior high. And then it pushed to 52-week highs here as well, all the way into March. But then since then we kind of stalled, and Apple has not been able to break out above the 134 level. Latest attempt, just the 19th, 20th of this month, resulted in what I think is a bearish engulfing pattern, where this white candlestick is completely engulfed by this red candlestick, and the next day it was confirmed by a big gap down following the earnings, and then kind of more sliding down as well. So one thing I wanted to point out is that the price kind of made a higher low right here, but the on-balance volume is showing that there is some distribution going on. So I'm guessing we're going to get a retest of this breakout at 118, 119 level for Apple, and should that breakout not hold, we could easily correct down to 103 level. Now Apple is still a bullish security, but if we correct down to 103, 102 level, that would potentially call that assumption into question. For now, I think that if we come down to the 118 level and hold support here, that could be an interesting position and possibly a buying opportunity. At this point, I have no position in Apple. Next one very quickly is the semiconductor sector ETF XSD, also a very broad ETF. so it's kind of like a good representation of the semiconductor industry. So this one is kind of interesting because once again I pointed out here that the selling here started before the Greek crisis hit, which was on Monday, and this selling started on Friday. So it looked like semiconductors were somehow sensitive to this latest market correction, and this is over 15% correction, so it certainly is under pressure. Now, having said that, XSD actually went in our buy signal just a few days ago, right here on the 28th, I believe. So we'll see how it goes. XSD represents, or the semiconductors represent about 7% of Qqq. So if we see a rebound in the semiconductors, then that will definitely help the Qqq as well, the Nasdaq 100 ETF. Let's look at bonds next. TLT, 20 plus year Treasury bond fund. So last week I pointed out that we had a breakout above this resistance level at 120.57. It was a close above it. The price continued higher, and then it was a throwback, and then a continuation higher. So Friday actually looked pretty good. Really, not a bad action at all. Pretty bullish action. Now, TLT is coming up, and certainly on some tests of this uptrend that started back around here in June, July. So first of all, this green dotted line is a 200-day moving average. It's an important level to watch. Here is another peak at 123, another peak at 123, and this resistance level now, which was from a broken support here. So there's lots of resistance in this area, and I'm guessing if we gap up above the 200-day moving average and then continue higher, then this resistance would have been taken out. So this is for now still, TLT I think is still long-term bullish because there was no support break below this level at 115, 114 and a half. Should have, if the TLT broke down here, I would have treated it as a bearish security. For now, I'm still treating it as a bullish security. And since strength in TLT is helping interest rate sensitive sectors, of course, utilities is one of those sectors. So looks like we had a I think this is like a false breakdown here in mid-June, and then rebound. So kind of like a bear trap right here, and then a rebound. And then this Friday, actually very interesting, is that TLT, this is XLU, closed above this resistance level from mid-June. For now, you can see the 200-day moving average acted as a resistance, and this this tail out of the top is kind of like a rejection candle for now. But if there is strength in the bonds, then I think utilities are going to benefit further, and we may see further strength in utilities should the bonds continue to rally. The long bonds, of course, TLT. All right, next let's move into commodities universe. Commodities, of course, are priced in dollars, and continuing strength in the dollar is weighing on commodities of all sorts. So a couple of weeks ago we had a breakout in dollar with a close above this resistance level. Then afterwards we had a throwback, and this week we had two throwbacks actually, one right here on Monday and one more on Friday, I believe. So looks like both times the support held, and this is a big hammer candlestick, and I think that strength in dollar will continue, and this will further weigh on commodities of all types. So let's look at gold. Gold is a commodity. It is priced in dollars. Gold is bearish. It's been bearish since its peak back I forget, 2011, I think. I forget when it peaked. But in any case, this is a 5-year low here. So 52-week lows, 5-year lows, all-time lows are, of course, bearish indicator. That means the prices are pushing lower. So a couple of weeks ago, we had a major breakdown of this level, and so I think at this point of the game, we may be kind of oversold, because you can see the MACD is now in a very oversold territory. But oversold doesn't mean it's going to rally. It just means we may see a rebound to the broken support at 1140, possibly 1160. But also, it's entirely possible we may first see a leg down, another leg down, before any kind of meaningful rebound takes place. And picking bottoms in a downtrending security is very difficult, to put it mildly. And vice versa, a picking tops in a bullish security is also quite difficult. So next, let's look at GDX, Gold Miners ETF. So major breakdown here over the past few months. Also a gap, what I think was an exhaustion gap. But once again, even though this is a very oversold ETF, let me just show you how oversold this. MACD is in a very oversold territory. This is a bearish security, and it's once again difficult to say that oversold. I generally tend to ignore oversold conditions in a bearish security. Now, again, we hit just on this Thursday, we hit an all-time closing low. This was an all-time low here at 1317, but this is an all-time closing low. So I'm still not seeing any evidence of any kind of rebound. Maybe we're seeing some accumulation as this is on balance volume. Possibly there's some accumulation going on, but it's difficult to say with a bearish security where the bottom is. So gold miners bullish percent index, I pointed this out in the past. Actually, let me just zoom out, I'll show you again. It's easier to see on a longer term chart. So you can see here bullish percent index hit zeros, and then we had a pretty nice rallies here as well back in November and December. Now we're there, we're at zero, where our bullish percent index is at zero right now. So we may see a rally, like a short covering rally is a way to describe it. And then you can see MACD is in a very oversold territory. So right, so anyways, bearish security, difficult to call bottoms. I think if it rebounds to the broken support here at 1630, possibly higher, I will be looking for shorting opportunities again. And then finally, let's look at oil. So USO, United States Oil Fund, our short signal was, I believe, somewhere around here in May. And then we opened the position in SCO. I still have position in SCO, the inverse oil ETF, open, and this is actually an all-time low. So I think we may see a breakdown below this level further. We'll see. So one thing to point out is that USO is a ETF, and it holds a basket of futures. So there are all kinds of slippage and rollover costs associated with the ETF. So if you trade in oil, I think it's better to look at actual price of oil. So this is West Texas Intermediate price, spot price. And several things I pointed out. So the first is a short signal right here that we had back in May. It took a while for it to work, but it did break down. And then the latest pattern, I think that's still at play here is this bear flag. So a strong breakdown, a kind of rebound in the form of a flag, and then another breakdown right there. So right now I think we're still breaking down, and if this pattern itself, if it works out, I think the target area would be in the $43, $44, $43 area. So we'll see how it goes. I think that once again, oil and actually most of the commodities are in a bear markets. Alright, let me show you how to find us on the internet. Please go to MasterChartsTrading.com. We have a blog and I post this information there. All of the charts that you saw in this section are located on our public chart page right here, and you can follow along on the public chart page on this link. Please sign up for our mailing list, and if you have any of the accounts of social media accounts, Twitter, Facebook, YouTube, or StockTwits account, you can follow us there as well. That's it for this week recap. Thanks for watching and have another great trading week. Bye bye.